India's largest AMC by assets and an AMC that has the maximum PIN codes of the country into its funds, be it millennials or Gen Zs, SBI Mutual Fund has managed to understand the pulse of Indian investor and to a very large extent have transformed savers into investors. Let's talk more about Indian investors and the way Indian investment scene is changing. I have with me DP Singh, DMD and Joint CEO SBI Mutual Fund. DP sir, good evening and welcome to the show. And first of all, congratulations for you. Congratulations to you for the new role of DMD and joint CEO. Talking about your experience, I think it's more than 31 years in banking and financial services, and you've been with SBI Mutual Fund since 1998. But talking about the change in an Indian investor, talking about the entire investment change in the investment scene, I want to understand as an AMC, what is the top 10 priority that you might be working on from now on, or maybe already witnessing, and these changes are being implemented?
Yeah. Thank you very much, Kavita, for having me on the show, and thank you very much for your good wishes. See, as far as priorities are concerned, all the priorities will be sub-priorities to the one single mission: how to get more and more Indians into the investment journey, and that journey in a very very ethical manner, in a very transparent manner, through the best vehicle of investment, that is mutual fund. How to get more and more retail investors, how to get more and more people from every nook and corner of the country is the mission. And how to do that, the priorities are, number one, do it in a staggered manner. Don't put anybody on the highest risk spectrum to start with. Start the journey with the lower risk spectrum and take it forward to the next, because high risk high return dictum is very much there. It's not that when we talk about high risk high return, it doesn't mean that there's going to be very very high risk. This is a relative risk theory, and we in mutual fund, with so much of experience being there in the industry for almost 36 years now, we feel, and being the largest, we feel that this is our responsibility to do the market making rather than looking at the market share. After being on the podium at the number one stage for more than 4 years now, and likely to remain there. Now our journey is not to look at the AUM, but look at the number of happy investors we can create in the country, and how to take it forward. That is under that, the sub priorities are definitely ease of doing business, going digital, when physical and digital put together, how to create a winning strategy for every niche of investors, because every individual has a different goal, every individual has a different risk appetite. Taking care of them and offering a product which fits into their priority and which fits them the best, and using the distribution network of individual financial advisor, network of national distributor, the network of all banks, as well as being available for B2C kind of business through our digital assets, as well as through a network of our branches. These are the priorities, and this is a journey, going on journey. It's not something new, because we are into an industry which needs to be made very simple. This is actually very simple, but sometimes out of our curiosity of looking very different, we make it complicated. So we sell simplicity. We sell the simplest of the simple products to all the investors in the country. That's a mission that we will continue with.
As rightly told by you, this is a very ongoing journey, and there'll be so many changes. And talking about you, you've been a part of this very crucial journey that leads towards fulfilling the dream of an India that's financially empowered and also literate. I also want to focus on the distribution aspect. First, I want to understand the kind of changes, in terms of mutual fund distribution that has already been there. And now what are the kind of changes that are needed and are already implemented via your AMC, via regulator? How is the distribution network or this channel is being made more transparent, more uniform for the investors also?
So I think this is a very apt question. In fact, when I look at the data of what is happening today, because the the economic viability model for the distributor is very, very challenging. See, today when I look at my number, the business number, what we see is that money is either coming through SIP route, which is a global success story. And India's SIP book is definitely a global success story. Money is coming through the SIP route, or it is coming in through the creamy layer of the investors, like the big ticket business, 20 lakh, 50 lakh, 30 lakh. Whereas the mid size of the pyramid, which is very, very huge, the people who can invest 20,000, 50,000, 100,000, 200,000, those kind of businesses are not coming into mutual fund industry. And this is which I feel is due to the model of remuneration which is there in the market, because people don't feel motivated to get a low ticket business because the acquisition costs have gone up, and until and unless somebody gets the acquisition cost, then there's no motivation for the new players, and the number of players in the market for pushing mutual fund product is very, very limited. If you compare it with the distributors of not similar, but the protection industry or the insurance industry, the number of distributors selling insurance products are almost 40, 50 times of that of the active distributors in the mutual funds. And with so much consciousness on the cost, so much concentration with the cost models also, higher the size, lower the cost, is making it a little more difficult for the low ticket business. I feel that that's a challenge for us, and we will need to navigate it. And one good thing is, see, we are engaging with the regulator, and honestly speaking, the regulator is very, very open to do anything for ease of business, for ease of growth, for this thing, and we are doing it. I think the sometime soon we'll have a model where we are able to get more and more new investors into the country, because today whatever numbers we are seeing coming to the same set of investors, or new investors are very little. So that's an issue.
DP sir, let's also focus on the investors from B30 towns. Now, how has your distribution network, or maybe your focus area, has increased to these particular towns and cities, and what as an investor you think these people are?
Kavita, honestly speaking, see, B30 has been an area. B30 has been an area of concern for everybody, and B30 is from where at least we are getting much better business than everybody else, thanks to the brand, to the distribution network of SBI. They are available. There are 22,000 branches. At least with brick and mortar of SBI, and we are also having SBI as our brand name. See, people have a lot of trust out of it, and they have a next door to knock at whenever they problem, if there's any issue with them. So that is something which we have used to penetrate more into the um, B30 towns, and B30 towns today are contributing almost 17% of the AUM. But if we take out the institutional business or the wholesale business, which is coming in the aggregator market like Bombay and Delhi, then the percentage goes up to almost 25 to 30%. And honestly speaking, this is the same number which is there in the little less than the bank deposit number which is coming from these two. The penetration requirement is much more there, but more from geographical point of view, this is the economic strata which is important to get more number of customers. I think if we feel that in the metros or the big cities, we have optimized and we are getting, because numbers show that we are getting more business from there, but this is more coming from the creamy layer. The lower strata, lower economic level business is still not coming even from the metros. So we need to have a strategy to get more and more business from B30 towns, as well as activate the lower strata of business, lower income level uh, investors into the fold of mutual funds. That is equally important. For example, if we talk about Mumbai or Delhi or any other metro towns, If we say that we have optimized, then I think we are fooling ourselves. There's a huge number of customers available, huge number of prospective investors who are there, who are still to enter into this journey of mutual funds.
DP sir, what's the kind of mutual fund category that's doing well for you? Because as an AMC, you have an investor of every age, of every income class. Talking about specific categories, where do you think the money is coming in, and what specific categories are you trying to push across, also looking at the current financial situation?
So at this point of time, at this financial situation, we are definitely trying to push the hybrid funds, because hybrid funds take care of three, four pain points of an investor. Investor doesn't always cannot make out that when to get in and when to get out. But one thing is there, the sweet spot where we are in as a country, some sort of equity exposure has to be there at every point of time. If we'll not do that, we lose out on the growth journey of the country. But at the same time, we have to see there's a risk appetite issue, because equities per se, theoretically and otherwise also, are a risky asset. And at the level where we are in, where it's generally said the market is not cheap. I will not say it's costly, I will say it's not cheap. So it's not prudent on our part to nudge investors to get whole hog into the equities, taking care of their risk appetite, especially so when we swear that our job is more of market making, not market sharing. So that when we are getting new customers into the market, then we also feel that this is our responsibility to make sure that we have a set of happy investors, not unhappy investors. So we are pushing all sort of products, like starting from conservative hybrid, from arbitrage fund to conservative hybrid fund, to multi-asset allocation funds, and the balance advantage fund. These are the products which we are pushing in a big way. And we are also showcasing through our investor awareness campaigns that there's a perfect product for every age group, every niche. And age group, see, also is not a right way of looking at it. When somebody is having huge money which is there for the next generation, so definitely the risk appetite is much higher. But if the money is there for the sustenance during the retired period, then the risk appetite for the same age group is totally different. So we have to look at the individual. We have to look at the age also. When anybody who is entering into the jobs today, who entering into the earning era today, they have to get into equities to start with. And honestly speaking, we are so happy to have the social change which has happened 5 to 7 years ago, 5, 10 years ago. We used to talk about that youth need to be told that they need to invest rather than spending on white goods and so on and so forth. But today, every youth, every young person who is entering into the earning era, they're first looking at where to invest. Of course, there's a big set of people who have burnt their fingers by entering into F&O to start with, but that's something. When you get hurt, you get intelligent also. So that's something I think they'll get back to the normal capital market products, and mutual funds is the best route to do that, and we'll get benefited out of that.
DP sir, what about women investors? How are you trying to reach out to women investors, and not only reach out, how are you trying to financially empower them, and also financial literacy, which I think has become has taken center stage for a lot of AMCs. How are you going ahead with this agenda?
See, there are two. See, if we talk about the women investors or prospective women investors, there are three, four niche groups. One, we generally, when we talk about the women investor, there are perceptions. If there's a perception on the young professional woman, then there's no need to differentiate between the genders, because they are already as empowered, as knowledgeable as anybody else's, and their risk appetite or their behavior is as good or as bad as any other investor will have. So I would not like to differentiate on the gender basis to that niche. But when you come to the old age kind of women, all thought process kind of see women investors like housewives or the people who are earning, but letting the male member of the house to take care of the investors. They yes, the empowerment is required. That we are doing. First thing, our investor education starts with the educating the intermediaries or the influencer or the person who is generally talking to these women about the investments. So we in our fund house we have a separate set of we are engaging with them through our distributors, through our own team members. We have a program which we call it Chart Pe Charcha, which we are doing all across the country, where our women, our team members, along with the experts of the market, we engage with these people who can influence many more, because we are into the multiplier kind of thing. When we will talk to one person who is an investor, or talk to an individual who can talk to 100 investors, the first thing is to talk to the person who can influence 100 more people. So as to optimize the time, optimize this thing. That's what we are doing as of now. But we are also trying to engage to the women investors in a big way through our ground activities. Maybe Simon will chalk out some strategies. We are trying to work on that. But honestly speaking, to the young professionals, we don't differentiate, because for us, every individual, irrespective of the gender, is equal. And I think the mutual fund products are the most democratized product. Reason being, anybody who is putting 500 crores, or somebody who is having an SIP of 500 rupees, is being charged in the same manner, the same expense ratio. So that's something which you need to talk about. But coming back to your question on the women investors, I think the education of the intermediaries, reaching out to the individual women empowerment groups, and telling them about the financial products is a journey which actually industry is also doing a lot. In fact, I came to know that even regulator is also coming out with a plan on Nari Siksha. Some program is coming, which is on the education of the women investors all across the country.
Right. I think that will be all. I have a lot many questions for you, but then I think the time is up for this particular segment. Thank you so much, DP sir, for taking time out for this very crucial discussion, and also informing us about the AMC's way ahead with their investors. Thank you so much.
Okay. Thank you so much, everyone.
All right, so we move on, and let's talk about our special edition in the first segment of tonight's episode of ITFC First Bank Presents Leaders of Tomorrow. Anand Shahani, the co-founder and CEO of Wed Me Good, highlights India's wedding sector's remarkable growth and dedication to tech and digital innovation. He also emphasizes the role MSMEs play in India's wedding industry. In the second segment, Parthip Thyagarajan, co-founder and CEO of Wedding Sutra, discusses the industry's post-COVID surge and the enduring influence of parents in Indian weddings. He also sheds light on the pivotal role of technology, with social media now serving as the bride's trusted wedding planner.